So we have been provided with the opening balance, final cash, dividend, total comprehensive income, that's profit, or these are given for 2 years. So yeah, on 1st January 2018, ZL had acquired a building at a cost of rupees 200 million and has rented it out on the same day for 3 years. On December 31st, 2020, the tenant vacated the building and ZL decided to transfer its head office to such building. So basically, it's an investment property, but the owner decided to use it as a property, plant, and equipment. The finance manager was considering the reporting implications of change in use of the building. He came to know that the building has erroneously been reported as a PPE since the inception and was depreciated on SLM basis over 20 years. The fair value of building has increased by 10% in each year since acquisition. Then follows cost model for PPE and fair value model for investment property. First step while solving such type of questions is that we consider if it's a change in accounting policy, estimate, or correction of errors. So basically, this is a correction of error case. Since we have by mistake accounted it as a PPE, but it has to be an investment property on the time of inception. The question says that the fair value of building has increased by 10% in each year since acquisition. So the original cost of building was 200 and 10% increase is equals to in 2018 it was 220, its fair value was 220 and 220 into 1.1, the 10% increase in the fair value, 242, and 242 into 10% increase, 1.1 is equals to 266.20. So these are the fair values. To further simplify the things, we will make another table. PP, investment property, and the others. Okay. In 2018, after depreciation, the PP was 190, 2020, 2019, sorry, it was 180 and 170 in 2020. So investment property as calculated over here, 220, 242, and 266.20 errors. So we have following errors. We have recorded the depreciation expense by 10 and we haven't recorded fair value gain of 20 rupees here. Depreciation of 10 for the 3 years. And fair value gain of 22 and fair value gain of 24.2. See, 220 minus 242, 22, and 242 minus 266.20 minus 242 is 24. And 220 minus 200 cost minus fair value, that's 20 ka fair value gain. We have recorded these depreciations, but we haven't recorded the fair value gains till date. Okay. SOCE extracts and SOCI extract. 2020 and 2019. Profit. So we have the profit given in the question, 82 for 2020 and 62 for 2019. Okay. So we have depreciation charge that we recorded by mistake. We will reverse it 10 for both years. And fair value gain that we haven't recorded. Fair value gain of 22 and 24.2. 22 and 24.2. So the profit we have attained is that equals 100. And this adds up to 116.2. Okay. So we will say this one is restated. You have to mention it in the question, since it carries marks. Okay. So for SOCE, opening retained earnings 2019. The opening retained earnings 2019 is 351 from the table we have been given. And correction of errors that we have come across. So 10 plus 5, 10 plus 5, no, sorry, 10 and 20, 10 का depreciation and 20 is the fair value that we haven't recorded. 2018 की adjustment होती है यहाँ पे 2019 के opening statement of changes in equity के अंदर होती है. So it's 30 and the restated opening retained earnings 2019, that's 381. You must have to mention that it's restated. Now we have the profit for 2019. That's also restated. It's 100 as we calculated. Restated. Okay. Then we have dividend 2019. 19 में payout. It's 15 rupees. Deduct होगा from SOC retained earnings. Closing retained earnings 2019. That's also restated is rupees 466. Profit 2020. It's 116.2. 2020 का profit है ये. And there's no dividend for this year. Closing retained earnings is 582.2. Okay. Now we have to do working for 5 marks / correction of error note. So correction of error note. SOCI और SOFP both बनेंगे. SOCI and SOFP. 2018 and 19 के लिए. 2019, 2018, same year. 2019 and 18. See, we have to reverse the PP. PP is reversal. And investment property that we have to record. So 2018 my investment property was PP was 190 after depreciation, and 2019 my 180. Investment property was 242 in 2019 and 220 in 2018. So we have a difference of 30 here and difference of 62 here. So basically, this is also our retained earnings. You just have to copy it through 62 and 30. So this is an SOFP extract. So we got an SOFP extract over here. And now we have to make an SOCI extract. In SOCI extract, we will reverse the depreciation. Reversal of depreciation. 10 each year. 10 and 10 here. And the fair value gain that we didn't record. 22 in 2019 and 20 in 2018. So that is increase in profit by 33 here, 32, sorry, and 30 here. So we are done with the question. It's important to note the requirements of the question. It's a bit confusing between the correction of errors or change in accounting policy. But it's a correction of error because we have by mistake recorded it as PP, but we had to record it as investment property.